Hello friends, welcome to the new video of Urban Trader. Let's get started. So today we are talking about how 90% of us earn money and if something is wrong in this. So this is basically I want to share my thoughts in terms of what I think about this. Cash flow quadrant. So this is the interesting concept which I come across by Robert Kiyosaki, who talks about four quadrants, cash flow quadrants. If you look at the cash flow quadrants on the left hand side, we have employee and self-employed. On the right hand side, we have business owners and investors. Employee is someone who actually trades his time for the money, where he has a job, 8 to 6 job, where he goes to a particular place and does some work. For that, he get paid on monthly basis. And self-employed is someone who actually has a skill and he creates his own job and tries to create a living out of it. So it's basically self-employees. You can give an example like lawyers, doctors, who has a skill and they try to trade the skill to earn money. And employees are someone who actually have time, who are kind of workers who go to jobs to make income out of it. On the right hand side, if you look at, we have business owners and investors. Business owner is someone who people work for him, and because people work for him, he creates a leverage out of it, and he makes a product and services which can be sold across locations, across regions, through which he makes a money. So what he does basically is he utilizes people's effort to create leverage for him, and he makes a money out of it. Whereas investors are someone who actually has a lot of cash and who actually invest into the business, who makes a passive income based on the business revenue what they make. They basically look out for assets where they think that they can generate a passive income out of whatever they invest. So that's how they make money. If you look at most of us, the upbringing is always, it's been always taught that you study well, get into good college, do well and get a good marks and get into a good job. And that's how we think that life is settled and we can go ahead and create a better life for ourselves. But only after you spend couple of years in career, in corporate job or working for someone or even doing a small business, we will figure out that life is a rat race where we try to go behind the money to achieve something, but we are trying to spend our time and effort for someone else, and we get paid for what we do as a work, but we will not be able to cover a lot of aspiration. When we look at the details in terms of population, I think 90% of population, we look around ourselves, we have people from all sorts of life. 90% of the population has only 10% of the wealth, while the 10% of the population who are from the business and investors has the 90% of wealth. So when we look back and think this, we are working in an industry or a segment of occupation where we have only limited exposure, or in possible wealth which can be created is only 10%. So that shows that we need to move from the left quadrant of employee and self-employed to right quadrant of business owners and investors. And that brings up a question in terms of why we think that we need to move to the right quadrant than being in the self-employed or employee. We always have a limited set of time which we can trade for the money what we could make. Let's say in a day we can spend possibly 8 hours, 10 hours which we could work on a job and we can get paid. And even if we think that we can work 12 hours to 14 hours per day, that's not sustainable, and that's not something which we could do for a longer period of time. So what it shows is the number of hours which we could work for per day is limited. That would cap in terms of the amount we could earn. So that will set us in a stage where we cannot make exponential or income in terms of what we can earn out of the job. And when we have an expense which should be growing based on the inflation, which is always increasing, what this creates is this creates an imbalance, and that would cause a financial stress. And some of the studies what it has shown is it actually creates a sleep disorders, overheating, and we actually create habits which are basically consuming substances which are not good for the body. It can also create relational issues within families, and and it also shows anxiety and can create health problems. And some of these financial stress also shows up in the job in terms of how we react to people, how we work a job, and we are always under stress to make sure that we pay our liability in terms of the loans we have taken, or in terms of the needs what we need to meet and the expenses to cover. And that's how we would get into a trap where we think that we need to earn more so that we can achieve more and we want more. And that's where it creates a psychological problem in terms of how we manage our finances. And what I have seen is also, the people always have a limited exposure to limited set of assets. It's because of the lack of knowledge or lack of financial awareness in terms of what they think or what they could do with limited set of cash what they have. So that's where I think the lack of knowledge can actually cause an financial stress for the people. So this video has been created to give some exposure in terms of what we think, what we could do being an employee and self-employee, how we can get exposure to right hand quadrant, and still we can make an additional leverage using the existing income what we have, and slowly and steadily we can graduate to the right quadrant with having a right financial knowledge. If you look at the possible investment options what we have here, there are multiple options we could choose from government security, gold, bank FDs, and real estate and stock market. And every each of these asset classes comes with pros and cons. If you look at government securities, they possibly provide the best secured options for fixed returns if you're looking at, but at times they'll not be able to beat the inflations what we have. So if you're someone who is looking for a fixed return which is backed by the government, I think there is a possibility that we can consider this as an option. Gold is something which also possibly an asset class where we could consider given the times where we are currently in. But the challenge would be, if you look at the physical gold, there's a wastage in terms of when we buy gold. There are a lot of additional, 16 to 20% wastage it would be charged, and even securing and keeping it safe, in terms of physical gold is a challenge. And the other option within gold, what we could consider is a gold ETF. If you're someone who is considering gold, I think it's a good place to explore how the gold ETF works. In terms of bank FDs, we as get this interest, which are actually TDS, tax deducted source itself. It's always lesser than what we are actually, shown interest at the bank. And this most of the time this is not in inflation beating interest rate what we get. It's always the less. And the other possibilities, you can go for the corporate bonds or debt funds. And some of times where some of these bonds, the funds will have a rating issues where it's not only lose, you end up losing your interest, but also you would lose capital also, so you need to be cautious on that. Real estate is an asset class which has always been, from our parents and grandparents, it's always been taught that it's a good place to park your money or look at as an investment option. And the challenge with this category of class is, this requires a lot of large sum of cash to be invested, and there's no liquidity. That means that whenever you want to get out of that instrument or you want to sell a real estate asset, so they're not, you need to find the right set of people who can actually do the transaction. And it's always limited or a localized market where it can also comes with fraudulence risk in terms of how people manipulate the papers or the documentations associated with the real estate. That's other interesting asset classes is stock market. And this is something which most of you would have come across in your life. And what happens also is, this is not something which always goes straight up, which has a lot of fluctuations within the market, how they behave based on the economic conditions and how what's happening in the real economy. And sometimes what it also happens is, it get into burst mode and bloom mode. And it also depends, in terms what, irrespective of what happens in the stock market, what it comes down to is what is the stocks which you're holding, are they giving value in terms of the profit what you're holding them, or is it, are you losing cash when they're going down. So it's very important that what stocks you hold or what instruments within the stock market itself you're holding it. That's very key in that perspective. Let me cover some of these asset classes at high level. If you think you need little more detail video or content to be created, let me know in the comment. I am happy to cover that. Just looking at the government securities now, there are multiple instruments within government securities which are backed by RBI, which we could buy either from the bank or from the post office, where we could avail this facility. Some of them are PPF, Sukanya Samriddhi, or fixed deposits at different tenures. We have NSE and the Senior Citizen Scheme also. If you look at the overall trend, from last 10 years to now, the overall trend in terms of interest rates are actually coming down, and that's the trend which is going to continue. So what this shows is that, technically down the line you will have less returns you're going to make out of the fixed income, and though some of these are tax exempted, but net to net you will be earning less interest in down the line. So if you're thinking someone who just because of fixed return whatever cash you have you can make a living out of in the future, or thinking of retirement, I think there are problems or the challenges would come across later in the future, so which you need to be cognizant of. The other asset class is called a stock market. This is the backbone of the economy. And when we look at closely, I think stock market, generally whenever you talk to people, the general presumption is, stock market is complex. And that's the nature of the stock market is. And it basically offers a multiple products offering in terms of what we can choose and how we could manage or avail the product offering which we can choose, and we can still get a benefit out of it. And it also comes with a high risk for high return in terms of the exposure. If we increase the exposure, there's always a chance that we will have a risk associated with that. So there's a possible ways that we could actually manage the risk and still get a return out of it. It depends on person to person, and it depends on the stage of life the person is currently going through and what he thinks that how much risk or how much exposure he can avail to this particular asset class. And I think since it's the most complex asset class, I think I'll not be able to cover this in this video, but it requires a lot of detail, deep dive into this to give a clear picture, a clear understanding of what it is and how we can utilize this concept for our daily living and how it can help us for making a better wealth. So that's what I would like to cover in the next video. So let me know your views on this. A quick intro to Urban Trader. So what we believe is we try to bridge stock market with the knowledge what we have over the years of experience, and we truly believe that stock market is a fun place to work with, and it also can create lifestyle and wealth also. Our objective is basically to create a strong financial knowledge by learning, sharing, and practicing the stock market. This is basically a journey of a novice trader. That's me, becoming profitable in managing trades of day trades, swing trades, and long-term investments. That's what I would like to share here. This is a quote from a well-known trader. This Jesse Limon. He always talked about buy rising stock and sell falling stocks, which is very fundamentally true in terms of the stock market. And we also believe in we work so hard to earn money, can we learn together to make it a little better or manage it a little better. So that's the and fundamental philosophy of what we think from Urban Trader. We don't have any uh, partnership or love for any financial company, bank, or financial products. We will get completely unbiased info here. That's what is our intention is. Viewers must seek advice from a financial advisor before taking any investments decisions based on the views expressed here. And all the video content what we have made is only for information and knowledge perspective. So talk to your financial advisors before you take any financial decisions. Thank you. Thanks again.